Joining us now to further break down the numbers from the last month's jobs report is Brent Wilsey. He's with Wilsey Asset Management. Good to see you, Brent. Thanks for coming by.
Good to be here.
What do you think about just what the president was saying and just the jobs and American-born versus those coming in from other countries and how all that plays out and just in general this jobs report?
Well, I looked at the numbers and I don't think what he was talking about really plays that much of an effect yet, because I'll give you the numbers: 147,000 new jobs created, better than the estimate of 110,000 jobs. So that sounds pretty good. 73,000 were government jobs, 80,000 state and local. The Fed was down 7,000 jobs. So if you take those away, you'd only have a gain of about 50,000 jobs. So that was not good. We did see good things in healthcare, up 58,000 jobs, leisure hospitality up 20,000, construction 15,000. So there are some strong points. But the thing I noticed was, and everybody talks about, oh, the 4.1% unemployment rate, pretty good. But you got to look at what's called the participation rate. And this is how many people are participating in the job market. It's about 62.3%. But your prime workers, who are, 25 to 54, they accounted for 83.5%. People our age, I think I'm older than you, so I won't count you, Mike.
I'm 29, but go ahead.
Okay. That group above 55, their participation rate is only 38%. And why? A lot of people are retiring early. They did well in the market. They did well in real estate. And they're saying, you know what? I got enough to retire on. I'm 57. I'm going to retire now. So that is really hurting the job market. That is why unemployment went down to 4.1%, because of less people in the market participating in the jobs.
Do they look at people who have two jobs? Is that like if somebody's got two jobs, then both of those jobs count as jobs and you wouldn't kind of know whether it's one person or two people with those jobs?
They do have some type of an accounting for that. It's very vague how they do that, but I gotta say, most people, I don't know anybody anymore that works two jobs. I mean, I don't know if you know anybody, but most people work one job, that's it.
Yeah. So why is this important? Why do we look at the jobs report? Why do we look at the unemployment numbers? What does that tell us about the future and maybe whether inflation, if we're in inflation or it's coming, and what does it also tell us maybe about if the Fed might cut rates, during the next meeting?
Well, the job market is probably one of the most important indicators for strength in the economy. Because if you have a job, you're going to be spending. But if you're worried about your job, think you might lose it, well, that could be a problem. And what I looked at too was the JOLTS report, which is Job Opening Labor Turnover Survey. That's very important. It shows that there's outstanding jobs of 7.8 million open jobs that people could get. And if you know that, you're saying, well, if I lose my job, I can get another job. That's pretty good. And that was above the estimate of 7.3 million jobs. And layoffs, you hear like, oh, Microsoft's laying off, all these companies, oh my gosh, people being laid off. Well, the layoffs declined by 190,000 to 1.6 million layoffs. So there's always going to be layoffs, but you see in the headlines, people get a little bit nervous. When they get nervous, what are they going to do? They're going to stop spending. Well, maybe we shouldn't buy that because the economy's not doing quite as well.
Yeah. So what about the fact that the Fed might cut rates? Do you think that might happen? I know the president is asking him to, Jerome Powell. What do you think might happen?
Well, unfortunately, Powell is waiting for the tariffs. We just saw those were extended, so he's uncertain right now. I kind of lean on the side. I wish he would cut, because if things do get bad, many times it takes too long to catch up. So, and again, if things were to be really good, he could increase. But it looks like July off the table. Now we're looking September maybe for a rate cut, which could be too late.
It's hard to keep up with the tariffs. I mean, you see something on your phone that says the tariffs are going to be implemented again. And then, it could be 20 minutes later, oh, there's going to be a pause on the tariffs, and you see the stock market go up and down based upon what the latest news is, what the latest tweet is. How do you make sense of all of this in the broader picture?
Well, I'm pretty excited. In a couple of weeks, we're going to have companies start reporting their second quarter earnings. And the companies, we listen to their conference calls, the CEO, the CFO, they give you insights of what they're seeing and what they're doing. So that's what we look at as the company reports. That'll give us more information in a couple of weeks. But companies are concerned about the tariffs.
What are you doing for your investors as far as how these tariffs are concerned and how possible rate cuts might be happening or not happening? What do you do with the stocks and the bonds? How do you kind of navigate these waters?
Well, we've been very cautious for a while now, and actually we hated to do it, but the company had its target sell price. We sold last week. We had like a 700% gain on this company that we bought 5 years ago, hit the target sell price, and we said, you know what, we're going to take that money, put it in cash, we're going to earn 4%. So a lot of clients.
What company?
Well, it's sold now, and I can't even mention it on here. But We have others like that as well. But we did it 5 years ago. But again, rather than saying, well, let's wait this out, things are great, we said, no, let's be cautious. I think now in our portfolio, we're in a $700 million portfolio. I think we're sitting on about $120 million in cash because we're waiting for that pullback. We may have found another company I'm excited about today, but I won't tell you what it is till we buy it.
Okay. Then I can buy it after you. Good to see Brent Wilsey for us.
Good to be here. Thank you.
President